All right, guys, so let's go ahead and hop into the cheat code algo version 4 and cover some of the basics. All right, so the very first thing that I want to show you guys is essentially what the software looks like. The first thing you'll notice is you'll see B and S signals, right? These little labels here, that's buy signals and sell signals that you're gonna be getting on a regular basis throughout the algo. Now, at any point in time, where whether it's a stock or forex currency pair or futures commodity, whatever it is you're trading, you're going to either be in a buy phase or a sell phase. But that does not mean that you want to take every single buy or sell signal, right? And so what we've done is we use something called CONFLUENCE to adjust and assess whether it's time to actually take a buy signal, where it's a true buy signal or a true sell signal or not, okay? So we're gonna cover that in a second. You see the buy signal, sell signals, and then you'll see this green trend cloud here underneath of that signal. Now, this trend cloud is one of the most key components to the tool itself, right? Because what this is basically an indication of how volatile that stock or asset is. The stronger or the more deep of an incline that you have in this trend cloud, the stronger that trend is. So this would be a very strong trend. Now, if you compare that to something like this, where you have a flat trend cloud, right? You do not have a lot of momentum here. So this is not necessarily somewhere where you would want to enter a trade. You want to enter a trade only when you really have strong momentum at your side and that green trend cloud is going up, right? Now, the basic strategy we utilize for the software is something we call the 4-for-4 strategy. And that 4-for-4 strategy essentially means that we're going to go for one, we want to have a buy signal. That's number one, right? Get the buy signal here. Number two, we have a strong positive trend cloud, right? That gives us our second trend confirmation. Now, the second tool that we have in this suite is the CC squeeze. Now, the CC squeeze essentially gives us an idea of momentum as well, but it also gives us an idea of whether we're overbought or oversold in any one particular moment in time. Now, what you'll notice with the squeeze is that there's four main colors. One is a bright lime green color, which means we have a strong positive trend. A weak faded green color, which means we have a weak trend, a weak positive trend, or a potential negative trend. We have a bright red color, which means we have a strong downtrend, or a faded red color, which means we have a weak downtrend or a potential uptrend. So in order for us to take an entry to the upside, we're going to also want this green trend cloud to be a bright, nice bright lime green with the bars trending upwards, right, in an upward fashion. That gives us our third signal that we can potentially take a trend. And then there's the fourth tool that we have, which is the CC swing. Now, the CC swing is essentially an oscillator that moves between the 2 points here, your top red line and your bottom green line, and then also a zero neutral line. Now, when the CC swing is trending near the zero line, that means you're in an area of consolidation or a neutral area. Once it starts to trend upward towards your overbought line, now you enter into a positive trend. As you leave your overbought line and turn red and start trending down, you now are entering into a downtrend. But as long as you're above the zero line, your uptrend is still intact. Once the CC swing leaves the zero line and starts to enter negative territory, you now have a downtrend that begins, okay? So the fourth thing that we want to take a trade is we want to see our CC swing entering into a positive trend above the zero line, which we have here. And this gives us our 4 out of 4 confirmations. And this would be a solid entry point. We would enter right in above this area here, and we would ride this wave all the way up until we get a sell signal. Once we get a sell signal, we go ahead and we exit that trade, right? So this is a beautiful setup here, because what this allows you to do is it gives you a framework from which to enter your trades. Now, once you have all 4 of these lined up, you can eliminate a lot of the guesswork that you had before of trying to identify when you want to get in, timing wise, whether, whatever it is, issues that you were having before, it really makes it very simple. Once you have all four lined up, you take the trade. Now, does this work 100% of the time? No, nothing out there is going to work 100% of the time. However, this does work a great majority of the time. Even if you don't catch one of those big, massive runs, chances are you're not going to lose on your trade so long as you execute it properly, okay? Now, when it comes to taking these trades, how do we know when to take our profit out? Now, that is the key question that a lot of people have. Now, what we have here in the tool is what we call our trade manager. Our trade manager gives us a very solid idea of where we want to start to take profit off of the table, because we don't just want to get into a good trade and hold it for forever, right? We want to take profit off the table on the way up and start slowly cashing out of our position. So that way, if the trade does turn against us, we've already secured some of that bag, right? So what happens here is, let's take a look at this. This is actually a current trade right now in USD JPY for all of my Forex traders out there, right? This also does work on Forex. So here we are on the daily chart. We have USD JPY trending up. We have our buy signal, that's 2 out of 4. We have our upward trends here, that's 3 out of 4, and our 4 for 4 here with our swing. So we would have entered right in around this area here. We got an entry signal, actually it tells us exactly where to get in right here at 135.026. And so this is now trending upwards. We now hit our 4 levels, our 4 take profit points here, right? We have TP1, TP2, TP3, and TP4. These are take profit 1, 2, 3, and 4 levels. So what we're gonna do is, once we've entered into the trade at 135, we've rode it all the way up to 139.6, we're gonna go ahead and liquidate about 25% of our trade, 20 to 25%, depending on your risk tolerance, right? So now that we're here, let's say we had, let's just say $10,000 in this trade, and now we've rode it up to TP1, and we're trading on leverage. So let's just say we've gone from $10,000 to, let's just, for even round numbers, let's just say 20 grand, right? So we're in for $20,000 in this trade, right? What are we gonna do at TP1? We're gonna go ahead and take about 20% of those profits off of the table, which means on $20,000, we're gonna go ahead and sell about $4,000 worth of that trade, and we're going to put that aside and secure our profits, which means we've now already secured about 40% of our original investment into this trade. Now what happens is that these TP1 levels start to act as what is called a stop loss. If we break below that TP1 level again, we'll go ahead and exit out 100% of our position and call it a trade. That would be a successful trade for us. But let's just say it continues to go up to TP2. What are we gonna do at TP2? We're gonna go ahead and take another 20 to 25% off the table, which would be, at that point, let's just say $5,000. Whatever the value is of that trade, at that point, let's just say it's another $4,000 just for simple math. We now are gonna take another $4,000 off the table at TP2, and so on and so forth. Every time we hit one of these levels, we're going to take 20% off of our investment off of the table, and by the time we get to TP4, we have about 20% of that portfolio left in that trade, or that trade size left in that trade. Now, like I said, each one of these levels acts as a stop loss, so anytime we break below one of the next levels, we go ahead and we take our money out. Just exit the trade completely. If it breaks all the way past TP4, what we're gonna do is we're gonna wait for a sell signal. We're just gonna let it ride until we get a sell signal, and then we'll cash out of that particular trade. So let's see how it worked on, let's just say, this trade back here in March of 2022. Okay, so here we are. We got a strong upward trend. We got a strong upward trend. We got a strong upward trend. We got our 4 for 4. So at this point, we've hit all three of our TP levels, which means we should have already taken about 60% of our position size out of this trade already. And let's just see how it played out. So now it starts to break higher, breaks above TP4. We take another 20% of that trade out. And then we're just gonna let the rest ride until we get a sell signal, okay? So it's still riding, it's still riding. And as you can see, this trade is absolutely phenomenal. Boom, we get a sell signal and we exit our trade here, okay? So now a lot of people would look at this and say, well, if I let the entire thing ride out, I would have made even more money. And yes, that is true. But when it comes to trading, there's two emotions that will get you absolutely obliterated in the market, and that's greed and fear. If you're too greedy and you want to maximize every single dollar out of every single trade, you're going to find yourself holding on to trades too long. You're going to find yourself over leveraged, and you're going to find yourself losing a lot of money. You take your profit off the table when you can and let the remainder, let the house money ride, right? You're still going to make a bunch of money, and it's all about longevity. So what happened here is we took a lot of profit off the table early. We let the remainder of our trade ride risk-free because we've already secured our original investment plus some profit. And we let the rest ride out until we get the sell signal, and we maximize those gains on that last tidbit of capital. Now, the other thing we have in this tool here is our yellow caution candles and indicators. Now, these two items are extremely powerful indicators. They give you a lot of insight into when trends are potentially going to change around you, because not everything is based off of just trend itself. Sometimes we have to look at price action as a means to understand whether or not something is going to be going down, up, or sideways. And so what these caution candles do is they give us an idea that, hey, we're green and we're positive, but when we get this yellow caution candle, that tells us that, hey, this green positive trend may be slowing down, right? Just like a stoplight. It tells us, hey, that's not necessarily that this trend is going to stop, but hey, this trend may be slowing down here. And as you can see, after we got that yellow caution candle up there, we had a short pullback, bounced off of our trend line support here, and we continued the trend upward. And then we got another yellow caution candle saying, hey, we may be slowing down again. It pulled back again, tried to make another attempt higher, got another yellow caution candle, and then shortly thereafter, got a sell signal, and that trend came to an end, okay? So the yellow caution candle is very powerful. Also the red and green indicators, you'll notice these items attempt to give us an indication of short-term tops and short-term bottoms. And so when you see a green indicator, it's essentially telling you, hey, this may be a potential short-term bottom. Not that the entire trend is going to reverse, but hey, this may be a place where we're going to have a small pullback. Now, when you have a yellow candle and a red indicator on top of one another, that gives a very strong signal. That's what we call confluence. It's two items telling us the same story, that, hey, the trend is slowing down and it may be a short-term top. Right before we get the sell signal, it's all lining up and telling us a story, painting us a picture, okay? So that's how those tools work together to give us some indications of where we're going and what we're doing in any particular trend at any particular moment in time. All right, now I want to keep this pretty brief because I know this is a lot of information, but the last thing I want to show you guys is what we call our reversal bands. Now, our reversal bands are a very, very powerful tool. Let's go ahead and take a look at it how about we go look at the S&P 500 during COVID, right? During COVID times. Let's go ahead and take a flashback to that time and see what we had going on back then. All right, guys, so this is the S&P 500 during COVID-19, okay? So, or right before COVID-19, I should say. So you'll see our reversal bands here. Now, these reversal bands essentially give us an idea of when a stock is running too hot, or a crypto or Forex, whatever you're trading, when it's run too hot and it's got overbought. What happens is you'll start to enter into the red or yellow bands, and that gives us an idea of, if it's in the yellow bands, we have a medium chance in the short term of reversing. Inside the red bands, we have a high chance of reversing sometime soon. And outside of the bands, we have a very high chance in the short term of returning to or reversing back out into these bands, right? And if you look on the bottom side, you have two colors, blue and green. The blue color essentially means the same thing to the bottom side. We have a medium chance of reversing to the upside. Green gives us a high chance of reversing to the upside. And anything outside of that, we will be reversing to the upside, in the near future, right? So again, this is all painting a picture and telling us a story. So let's take a look at what happened right before COVID-19. Okay, so we're trending upwards for some time in January 2020. We got a yellow caution candle here, right? We got a yellow caution candle here saying, hey, this uptrend may be slowing down. We got another yellow caution candle with a sell signal on top. And if you look down here, our CC squeeze is in the overbought territory. We get a overbought sell signal also with the squeeze on top of the sell signal we had here. We also have the CC swing hitting our overbought levels, right? That red line, it crosses over into the negative, and we have a strong pullback in the market down to the 50 EMA. We bounce off of that shortly, right? But as you notice, even though you got a buy signal here, what did we say? That's one signal. Even if we had a strong trend up here, that's two, but our CC swing is still trending negative, right? As well as our squeeze still trending negative. So this was not a good time to enter. We did not have a strong 4 for 4 confirmation, okay? Then what ends up happening is we have that short-term uptrend. We get another yellow caution candle, a sell signal right after that. And then what happens? COVID-19 hits and the entire market bottom falls out, right? We have a very strong and sharp drop here. We get a yellow candle outside of the reversal bands. That pops us up in the short term. The sell trend continues. We get a buy signal here, but guess what? The squeeze is telling the picture and the swing is telling the picture. We're still in a very strong downtrend. So even though we got a buy signal, that buy signal was not valid because the squeeze and the swing were still strongly trending down. So again, painting us a very clear picture that the market is in a strong downtrend. So what then happens? We trend outside of the bands for a nice period of time. We're getting yellow caution candles saying, hey, this downtrend is strong, but it may not be lasting. We get the yellow caution candles with the green indicator, a series of green indicators, all happening around the same level down here in the 240, 235 to 245 range, right? Which ended up being the market bottom, right? Yellow caution candles, green indicators, all through here. This was a great period of time to accumulate if we were paying attention at that time or if we had this tool. Unfortunately, the cheat code was not around at this time. Yellow caution candle, green indicator pops up. We then get an oversold buy signal, that little dot right there. We get a crossover in our oversold territory here. And then we get the buy signal here. And that gives us a good indication that this is a potential bottom. But what did our trend say? Our trends in the cheat code, go back in here, we turn the reversal bands off. Our trends gave us a nice strong indication we were good. So what did we have? Buy signal 1, trend 2, we had trend up 3, trend up 4, and we even had a bonus here being the oversold buy signal, and that gave us 4 out of 4 plus 1 signals that this was the actual bottom. And sure enough, shortly thereafter, the market rallied and we continued to have a great year. And as you can see, every single time that we had those pullbacks, we had a nice trend up, sell signal, overbought sell signal, etc. We had a nice little pullback, boom, buy signal, upward trends, upward trends, upward trends, 4 for 4. We're back riding the trend again. We ride it up. We get a yellow candle, red indicator, sell signal, overbought, sell signal, overbought, swing, and we pull back again. Yellow candle, green indicator. You guys can basically see the recurring theme here, right? It's pretty much catching everything. Now, again, is this going to be 100% accurate all the time? No, it is not. I do not want to make it seem like it is, or for have anybody, falsely believing that it's 100% going to work every single time. But I will tell you that 100% it will save you more money and make you more profitable trades than trading without it. I will say that 100% confidently, because guess what? Even if a trade goes against you, let's just say you took this trade here, 4 for 4 confirmation, great. We got an uptrend, we got an uptrend, we got an uptrend. So you would have entered in right around here. But guess what? You get the sell signal right around here. Okay, fair enough. That trade did not work out the way that you would have hoped it would, right? But guess what? You're not going to be sitting there holding on to that trade for forever, watching your portfolio die and hoping that it recovers. You're going to go ahead and use it as a stop loss and exit your trade. It's much, much better to be profitable 50% of the time, right? But cut your losses earlier on the other 50% of the time. So if you're making 20%, 50% of the time, 20% gains, but you're cutting your losses at 5%, the other 50%, you're still going to be much, much more profitable than being successful 80% of the time, but letting your 20% losses pile up to 30, 40, 50% losses, right? It's all about risk management. So the whole purpose behind this tool is to help you guys manage your trades better, cut your losses early, extend your gains and maximize your gains. That is the name of the game. We want to extend our gains and cut our losses early, okay? So this is a basic rundown on how the cheat code works. Now there's a bunch more tools in here from from key levels, supports, resistances, auto trend lines. We have all types of stuff inside this software, but on a basic level, this is how it works. Now, what I would love for you guys to do is make sure you guys click the link, purchase the software, see us on the inside the cheat code community, where what we're gonna do is gonna help you not just to utilize the software, but enhance your trading all the way around. We have a live trading floor with our team. You'll trade live with our professional trading team. They'll help you with every step of the process, not just learning it, but also trading with you. So the trades they take, you also can take too, right? While they're trading live. This is what we do here. It's a cheat code. We're here to help you beat the financial game, okay? Now, if you're interested in the Trading Plus coaching, go ahead and click the other link below. We'll have 2 links here. Click the other link where we'll sign you up for the Trading Plus coaching. That package literally is going to be a hands-on package. 52 weeks out of the year, we're going to sit down with you, walk you through step by step with a small group of other like-minded individuals who also are doing the same thing that you're doing with the same goals that you have to make sure you're successful in this market, okay? So I'll see you guys on the inside in the cheat code community. And listen, man, go ahead and get the cheat code. Start cheating today, man.